If you have an insurance loss, what's likely going to happen, you're going to call your carrier. They're going to send somebody who went to a weekend class at Home Depot, and they're going to tell you how much money the insurance company owes you. Anything on your Facebook. This video, for example, I can document your chair, looks like a leather couch, a box, a couple $1,000s of bourbon. That's from this one picture. This one picture, I can probably 7 to 10,000 would be my initial assumption.
John Hyre here with friend, colleague, fellow degenerate, Jason Bhattacharya. And
you got it.
And our degeneracy runs in similar directions. Like I think you've moved a little bit into tequila and a little bit out of bourbon, but you're still a bourbon guy?
I'm still a bourbon guy. We're in the summer now, so it almost feels obligatory to drink tequila. For my little fun thing, the blood oath has become my obsession. So I've got 6 through 12. I'm slowly checking secondary for the 1 through 5. It's an amazing centerpiece, and it's kind of become my pet project.
Okay. And that's at what, 98.7 proof?
Somewhere around there. It varies by the years.
Oh, I thought they always did it at blood temperature. Did they stop doing that?
I'm not going to open my mouth and remove all doubt that I'm a fool.
Okay. Okay. Well, so the reason we have you here, I mean, we can discuss our mutual tasteful alcoholism later towards the end. What your expertise is insurance adjusting, and you've been there, done that in any number of ways. And you can add, by the way, if I don't give you sufficient credit because I'm a stingy lawyer, feel free to add to and embellish your resume. I don't want you to go quite to, running for Republican office in Long Island lengths. Remember that guy? What the heck was his name? Like, he just made a bunch of stuff up out of whole cloth, and the truth was even crazier.
Yes. I'm almost not shocked anymore with what we're seeing in the political realm.
Dude, you're not kidding.
I mean, everybody's got a bullshit story. Half of it's true. The other half is a lie.
That's a great segue. Jason, what is your bullshit story? I'm going to let the audience figure out which half is a lie. Start off by telling us about you. I brought you for your expertise in insurance, but I also like just BSing with you. You're an interesting guy. So tell us, lie to me.
Well, I was a male model until about 3 years ago. I did hands and legs and had an amazing set of sculptured abs. Yeah. So I went from modeling, an amazing career on OnlyFeet, to insurance adjusting.
Cut. The insurance adjusting part's too filthy. It's a family show, man.
Fair enough.
How long you been doing the adjusting?
So I've been licensed since 2019, but a lot of what we do in this field ties back to the several years of construction and real estate. What I do is technically called public adjusting or private adjusting. In Virginia, the only adjusters that require an actual license are private adjusters or public adjusters, the ones that work for the policyholders. If you have an insurance loss, what's likely going to happen, you're going to call your carrier. They're going to send somebody who went to a weekend class at Home Depot, and they're going to tell you how much money the insurance company owes you. So you bring somebody like us in for several different reasons. A guy like you don't have time to deal with the insurance adjuster. Or expertise. You're a tax attorney. You can learn the insurance rules and laws, but it's just not worth your time. So time, money, or just they have an improper denial. There's a lot of different reasons that were brought in. So the term is public adjuster, private adjuster. Yeah, I mean, that's what it is.
All right. So which is it? Is it public or private, or is it one term?
So the license term is public adjuster. A lot of people refer to it as a private adjuster because we work for the homeowner.
So this is okay. So you're an adjuster primarily in a homeowner situation. Does the adjusting concept apply to other areas of insurance? Let's say I have
yes.
a non-home issue. There's liability for my business. I say something really nasty as a tax lawyer and I get sued because they said it cost them money in front of the IRS. And there's an insurance company that shows up and denies the claim and says, Hyre is a freaking genius and a saint. We don't believe any of this. Is there an adjuster equivalent in that context?
No. At least in Virginia, that would not fall under our license. We generally do first party. It would be property, auto, property. So property, there are people that specialize in auto. There are people that specialize in business income. I specialize in property. On a liability side, that's going to be straight to an attorney.
Okay. All right. So property, so it could be intangible or tangible. So business loss is more of it can be an intangible loss depending on the nature of the business. And so somebody has to figure out what truly is the loss and what portion of that loss is covered by the policy, for example.
Correct. Or simply proving it, collecting the records, coordinating with the adjusters, the carrier to see what they need to prove what you had or what you should have made.
All right. So you do real estate, real property, or do you do personal property of various sorts as well?
I do personal property only as it pertains to a loss in a real property situation. My specialty tends to be house fires. So the damage to the house and the stuff that was inside it, then we help with the housing aspect.
All right. So how do you figure out what was inside it? Nobody records all this stuff. How do you estimate that?
So it's as many attorneys have told me over my career, it depends. I think that's the thing you learn in law school on the first day after tuition is paid. So a lot of most house fires are extremely serious, but there is still some structure left. We go through there, we photograph, Matterport, videotape, do reconstruction with the or memory reconstruction with the policyholder. We collect photos as needed and as available. Anything on your Facebook. This video, for example, I can document your chair. It looks like a leather couch, a box, couple $1,000s of bourbon, et cetera, et cetera. If that's from this one picture. This one picture, I can probably 7 to 10,000 would be my initial assumption. You've got pictures of your kids at Christmas. What's in the background? There's going to be videos of the kids running around. We'll use that as needed for a forensic recreation. Now, some carriers, depending on how the policy is written, some carriers will release 50% of the policy limits up front. And if you want to get the other 50%, you have to prove the loss or spend the money. Other carriers will do what would you call? They'll pay a percentage of the limit if the entire house is unrecognizable. Some will require you to document every single item down to the spoon in your kitchen sink.
Oh, that's interesting. So when they require you to document every item, nobody can do that. So where does that go? To settlement, to court? Do they defend, delay, and deny?
It depends on the carrier and what their position of the month is. For that, it can go to court, but we always do our best to show a good faith list. So looking at your background, and knowing you're a man of means, we'll ask you a series of questions. Where do you shop? Tell me about your lifestyle. Give me some credit card receipts. If your credit card receipts show that you're a frequent Walmart shopper and we're claiming that you have Louis Vuitton bags, we're going to have an uphill battle. That could trigger what's called an EUO, or examination under oath, where they have their attorney who's pretty well trained to trap you. Oh, you told me a lie. No, you told me one lie. Everything's a lie. You're luck. If you don't drop this claim, we're going to press charges, type thing. But we have to create a story. The story has to make sense, and we do the best we can. A lot of what we do is going through the burnt house, running the math. You pick a shirt, for example. Your shirt, I'll guess, is $100 shirt. If you have a fire, what happened to it? Can it be cleaned? What is the process going to cost? What do we anticipate that result to be? If the cost to take your shirt through the process is $70 and it's $100 to replace, we're going to argue for replacement off the bat, because that $70 will come off of your policy limits. And that $70, you have less to buy another shirt.
And are you I guess it depends on the policy. Are you shooting for replacement costs, or do they depreciate it down to fair market value?
So depreciation is negotiable. It does depend on the policy. Most policies in the areas that I work have a depreciation component. Now, what is depreciation? It's an imaginary number that nobody can agree on. It is what is reasonable. Now, Virginia's we have an administrative ruling that says labor cannot be depreciated. I looked at a case in Georgia. Georgia does not allow depreciation on labor. So now that shirt, how much is the labor? I don't know. What is the labor? I don't know. And they're going to have to answer the same questions that I can't. Is the labor packing it up, or is the labor the guy who's sewing it together? Is the labor the picking of the cotton for that shirt, or is it the stitching of the labor? How do we break labor into this? So the world gets gray. And as a friend of mine by the name of Hyre says, in the gray is where we tend to play.
Oh yeah. Yes. Daddy liked the gray.
Good to go. Wait, that's a really bad visual.
Yeah, it's getting there, man. 32 years of marriage, it's starting to go out on me. But so thinking this through, so it's best faith guesstimate. So something some people could do is just go through once in a while and film your whole house. That's probably really valuable.
Yes.
It's easy to do now.
Film, video, photos. If you have a gun collection, and I know a lot of our fellow gun guys do not like taking photos or logging guns. There is a misconception that firearms have a limit on, and everything I say is it depends on the policy. Firearms have a limit, but that limit usually reverts to theft only. If you have a house fire or a different covered loss other than theft, it's usually covered up to your personal property limits.
How do you authenticate the date on the photo?
You don't.
You don't care? Okay, because I'm thinking I'm thinking about evidence in court. So that's my track, but there are going to be different rules for each of us.
And my job is to keep it out of court. I've out of the hundreds of claims I've done, I think I've kicked 3 or 4 to legal, and one of them is my own house.
Huh? Is there a story?
There absolutely is.
So wait, did they have you on tape going, fire?
If I wish I could take credit for this one. So little over, what was it, 22, I think it was 23. We had we bought a house. We bought the house, I think it was in 20, had to be 23. So the year we bought the house, 6 months later, we had a massive storm. The storm created some sort of issue where water entered the rear of the house. So my house is on the river. The river takes you all the way to the ocean if you're really, really motivated. So we had straight line winds come across the water. Somehow it pushed water into the house on the rear elevation. We pulled a little bit of drywall back and I saw one rotted cripple, which is the 2x4 under the window. I called the insurance company. Insurance company said, look, hi guys, red flag. There's a piece of rock right here under this window, calling everybody's attention to it. I am not filing a claim I'm filing a claim for water damage. Okay, not a problem, Jason. Your claim is covered, but I cannot cover the rock. No problem at all. We can fight about that one piece of 2x4 later. It's not a big issue. He wrote an estimate for, I don't know, 6, 7, 8 grand, somewhere around there. So we presented an estimate. We talked him a little bit. He told us to get an estimate from another contractor. Now, I'm a contractor. He didn't like my estimate. So I got an estimate from another contractor, one that they actually use. That one came in north of 100. I sent it to the insurance company. They didn't like that estimate either. So back and forth, back and forth. Then on a phone call, he's like, Jason, you didn't tell me you're a public adjuster. Okay. Well, this is the claim's going to ECU, Environmental Control Unit. Okay, why? Well, anytime there's mold, we send it to ECU. That sounds a little selective, but okay. Um, so then fast forward, they keep stalling, they keep dragging their feet. So now, and I'm arguing, I'm saying, hey guys, do your job. You have a duty to investigate. And we're going through this whole thing, and they keep just dragging their feet. What they're really doing is trying to run out the 2-year clock. So in Virginia and many other states, there's what's called a suits against us provision, which, if memory serves me correctly, contract law is a written contract, I think, has a 5-year suits of limitation. Is that right?
It varies by state and by contract issue.
Okay, fair. Here, the policy allows you to contract to a 2-year time frame to sue your insurance company. And if you don't file that suit by that time frame, you lose the right to do so. Now, where this really gets wonky is if you don't file that suit year 2, day 1, they don't have to pay you another penny, and there's nothing you can do about it.
But a lot of people don't know that.
No. Now, sometimes they do pay, and some insurance companies do pay after 2 years. In our case, everything they were doing was indicating that they were not going to, they were delaying this to run the clock out. Everything's nice, everything's good. Oh, we're going to take care of you. Your prices are too high, Jason. We want to be treated fairly. Okay, I want you to be happy too. I want this thing done. I'm trying to get the job done. So they send out their one of their network guys. Now, insurance companies have what's called a preferred vendor program. We send you enough business, you work according to our guidelines. Now, keep in mind, their guidelines of the insurance company are not the same guidelines that are in the policy. There are no guidelines in the policy for a lot of these, for the work that has to be done. So their contractor comes out. I walk them through. I give them the expert reports, the industrial hygienist report, which is a third party who does lab testing, says, hey, here's what you have. You have mold, you have this, you have that. Here's what I see. Here's what the conditions are. Here's the damage. Weeks go by. Hey, can I get the estimate? Not ready yet. Can I have the estimate? And after 30 days, they disappear. And if somewhere in this time frame, Nationwide brings their attorney in. Oops, I said the company. So then we're submitting estimates back and forth, and they're running the clock. Then, I mean, we've given them 3 estimates. We're not required to do that. We're not even required to give them 1. So they don't like it. At some point, their attorney gets involved, playing the good guy. He's just trying to be here to help solve the situation. He's playing the whole, I'm on your side, I work for them, but wink, wink, nod, nod, we'll get this thing solved. Months and months go by. They decide to send another contractor out because they're trying to do the right thing. For a portion of the house, so to give you a visual, it's 3 elevations to a house. The house is on the water, so most of the back of the house is glass windows. You have to pull a ton of drywall, and you have to put it back. Nationwide promised to pull the drywall out, to do it properly, which means mold mitigation to make sure that we're not getting anybody sick, and then putting it back, which means putting drywall, putting the trim back, painting, etc. Their guy comes in with an estimate of like $2,700. Keeping in mind, our estimates are in the tens of thousands. You got a major, it's a big issue. So I call their, what do you call it? I call their contractor. Hey, Mr. Contractor, you wrote an estimate. We're inclined to work with you, but have you reviewed the third-party documentation? Wait, who are you? I'm the homeowner. I'll be the client. Oh, I can't talk to you. What do you mean? I'm the homeowner, I'm the client. So call the attorney. Oh, that's not what they should be doing. I know that. So fast forward, and we're running right very close to that 2 years. So there's an attorney who works in the space
How
with
does
me.
how does this affect your living? Part of your house is damaged. Is it habitable?
Yes, well, debatably habitable. The term in the policy is normal standard of living. It's not the normal standard of living. Now, to aggravate the problem, so we are able to do temporary repairs to maintain so we can live in the house safe. It's not the way it should be, but with the way our living situation is, moving out is going to be an extraordinarily complex process. We're going to have to move out for a period of the reconstruction when the walls start coming down. It was a one-time thing, but they drug it out so long. Now a question turns into what is old damage versus what is new damage? They're arguing something that tends to be fairly frequent, which is the weeks, months, or years. Then they argue seepage. Now, if we look at the definitions, their definition and mine are nowhere near the same. If we're arguing and we cannot get to a settlement, ultimately the only way to resolve this is through the judicial process. When they opted to lock their estimate and keep investigating for 2.5 years, they were effectively trying to spike the ball. Can they do it? In my judgment, absolutely not. In their attorney's judgment, oh, we're trying to do the right thing.
Well, but I mean, the way it works, I've watched some of this from afar. A number of people give up, or a number of people give in. And even though they eat a punitive judgment once in a while of this is very bad and we're giving the homeowner much more than it would have cost to teach you a lesson, they do the math and go, okay, there's not very many people go the distance. Am I wrong about that?
I wish I could say you were. There's a book, I believe it's called Good Hands or Boxing Gloves. And it ties back to the McKinley report, I think, or McKinsey or McKinley, the consultants.
No, McKinsey. Yeah.
McKinsey, that's them. Thank you. They, I think it was Allstate, went and said, "Hey, we're bringing in $10 billion a year, and we're only profiting 500,000. Why are we not more profitable with that amount of revenue?" And after years of exhaustive research, the summary was, you can only reduce your copy paper and paper clips by so much. Your largest expense every year are your claims. And then they gave a statistical analysis. You have this many people, you delay, they'll take the first thing you offer. You deny them, this many people will take a settlement at this percentage. Now, whatever's left, you defend. Now, when you defend, you may pay 110%, but the statistics of these steps will tell you how to run your business profitably.
Okay, it makes sense that McKinsey was involved. That's the kind of thing they would do. And these guys brag about it on their resume when they want to be in government. That's nice. So your house has this damage. Question, because I would think that mold is getting worse over time, and that can actually have some pretty serious reactions. Are they not afraid of this? Is there no consequence to them?
So with the disclaimer, every policy and the law in states require you to mitigate further damage to the reasonable extent. And in this case, we drive the structure, but we didn't open the driveway. And from where I was sitting, it didn't make tons of sense to open up every single elevation on drywall and make this house unusable when the insurance company didn't even agree to it. Now, there are schools of thought to open everything up, but there are other schools of thought there's an obligation in your policy to present the damages to the carrier as often as they reasonably require. But there's another obligation, and that can interfere or overlap, which is present the damages for inspection, and mitigate further damage. We mitigated further damage by drying the area out, drying it out properly. Now, what's going on behind the wall, I don't know. Maybe it's nothing, maybe it's something. We had elevated mold counts, but the decision was made that if we're going to pull it down, you have to do it down. You have to go with a full mold protocol, which would be containment, negative pressure, or we could leave the drywall up. We could put plastic over it, so we could basically encapsulate it temporarily. Now, the loss happened once. So is there mold back there? To some extent. How bad, I don't know, but it's not blossoming on the walls. Had that happened, the math would be absolutely different.
Okay, so you have this damage. They drag, delay. We're into it for 2 years. Now what happens?
So suit was filed, but not served. So you have 2 years to file suit unless you get a tolling agreement. A tolling agreement is where both parties to the contract agree to waive that one provision. In this case, hey, Nationwide, we think we can work this out. We don't want to have to file a suit. That would force us both to incur legal expenses. We're making great progress. Will you agree to pause the ability for me to sue you later?
Okay, so then told a statute of limitations. I didn't know that.
Correct.
Okay.
I've done that with multiple other carriers. Now, that's usually done if everything's agreed. So working a house fire in West Point, which is about an hour the other way. Insurance company wrote an insanely low offer. I think it was 300 or 200 or something. Guy had an air handler in his crawl space caught fire. And I'm sure you can imagine a fire in a crawl space is a pretty significant structural issue. They sent out a restoration company. Restoration company did who the hell knows what. They write bad estimates, and it just gets worse. Claim is mishandled. We step into that claim. We write an estimate. We go back and forth. We narrow the dispute to a point where it was much cheaper for them to go with what's called appraisal, which is an alternative dispute resolution method. It's, I'd say, the equivalent of a bench trial. We hire an appraiser, they hire one, the two hopefully agree on an umpire. If they don't, then a court is tasked to pick. So in that one, we got an award, full policy limits with all enhancements for the structure. We got most of the limits for the contents. I mean, this was a weird one. They were what we call contents heavy. Read into that how you will. How do you evaluate one earring? Or I don't know, half a bottle of vitamins. Some of the things were Burger King wrappers. I don't know that I'd put a value in a Burger King wrapper, but half a bottle of vitamins, how much is that? I don't know. So we went through the process, and as we were going through, we were running on that 2-year window. Reached out to the adjuster and in their legal counsel on this one. We did not have legal counsel. We didn't need it at that point. I said, look, guys, here's where we are in the process. We're getting this thing resolved. We're doing everything right. I don't want to sue you just to have, I don't want to have this. We don't want to have to sue you just to say we did it. Can we agree to pause the time frame? Back and forth on their side. Yes, we agreed to a 6-month pause. Cool. Process played out. Hey, we need another 6 months. Can we do that, or do we have to go to suit? We can do another 6 months. Great. We've done this 3 times. So we've had an 18-month extension. And that didn't have to go to court. So it gets kind of where the process is. Everything's going to be a little bit different. On my claim, I think they were running the math, and the math said, if we have to pay this guy $250,000, $300,000, whatever the number is, and it can go as high as $700,000. we opened coverage. We probably shouldn't have, but we're going to let it go. We're going to take our chances in court. The climate in Virginia is bad faith damages are extremely hard to get, almost never get them. So the most the insurance company would have to pay is what they would have had to pay anyway.
Got it. So there's no incentive. Yeah, the math is mostly worst case. We paid what we should have paid. Odds of being penalized for screwing around are very low. Well, let's go. Let's see what this guy, if he's willing to tough it out or not, or he's going to take a settlement after we wear him down. Let me ask a question. You pay a lawyer to do a bunch of stuff. Do they have to pay the lawyer if they lose, or you're stuck with the lawyer bill and you just get paid what you should have been paid? Yep. There it is, right there.
So Florida had fee shifting, and many people know, reasonable people know that both sides can abuse the law, and there's always a pendulum. In politics, in life, and in law, there's always a pendulum. So Florida is a great case study. For years, Florida had some of the most plaintiff-friendly laws that are imaginable. I sue you, and I win. I win by $1.
And their fees went through the roof. Their insurance costs went through the roof. Yeah.
So I've got mixed feelings on that. I had a discussion with a friend of mine who is a lot harder than I am on certain on the principle of indemnity. And I am a true believer of you are owed. But I try to be practical with my thought process. Any item, every item has a value. And if we're disagreeing over $1, and that's a little bit of an exaggeration, but some people will take it to that extent. And then we're tacking you with $30,000, $40,000 of legal fees on what should be a $10,000 claim. I don't think that's reasonable. So the law was so strict in Florida that you had a few examples of that. Those examples were the ones the insurance company touted to the insurance commissioner, bought and paid. So you had that whole, so the law changed, and now it's no fee shifting, no bad faith, with very few exceptions. So now you have the insurance companies, they're masters of marketing. They're masters of buying the right politicians. I forgot which, they bought a Supreme Court judge. I think it was State Farm. I can look up the state. They had a $1 billion lawsuit. There's a judge running for Supreme Court of the state. They donated. He went their way. I don't know how that happened, but somebody smarter than me can figure that one out.
Question. Let's let you say something nice about someone. Which insurance companies are least bad? In other words, as a person who is being covered, which one do you trust will screw you less?
So Chubb has a pretty decent reputation. Pure has a decent reputation. I have worked with Amica on one claim. Amica tends to want things to go away, and they want things to be good for their home. So they're reasonable. The client who had an Amica claim was actually a litigator up in Northern Virginia. He bills a couple $1,000 an hour M&A type stuff. And he just didn't want to screw around for a couple $100,000. He'd rather pay my fee, spend time with his kids at baseball practice, and his practice of law. So we got that thing settled a couple months. They sent an adjuster out. I met with him. We worked on site. He wanted to hear what I had to say. He welcomed my being there. And the adjuster for Anika was more than amenable to working with us. She told us that what she could and couldn't pay, but she told us what she could and couldn't pay. Can't pay for this, but I can pay for this. Okay, we can work through this. And we had the shared goal of getting to a number. Once we got to that number, the claim was settled. Conversation was over. Everybody was reasonably happy.
When does hiring someone like you make sense? When does it not make sense? Let's stick for the moment to what you really know. Home disasters, obviously home fires are what you're really good at, but just home disasters in general. when's it good to hire you? When's it not? When would you tell someone, wow, you know, I don't feel good about this. I don't feel good about taking your money.
And for the record, I struggle saying I don't feel good about taking money. That just hits me in the soul, John.
I know, and I
Um,
don't have a soul, so it's not a problem. They took that out in law school. Although I do turn people away. I don't want a bad name. And so I try very hard to screen clients ahead to see, can I save them money on planning? Or if we're going to tax court, what are my odds of winning? What am I going to bill? And I'm sure you do the same for all of your joking aside. So who's a good client? Who's a really good one that you think you can help? And who are you like, I'm not so sure about that.
so it depends on the loss. I always tell people the best time to bring me into a house fire is after the fire department's leaving. Um, I'm able to control the narrative. I'm able to control the meetings. I'm able to have a lot more say in how the process goes. I use the terms. I'm very good at doing this, but I don't like to unfuck insurance claims. And by the time it gets fucked, the work is a lot harder. So I suspect similar to how you bill, if I bring you in early on a problem, my rate's going to be cheaper. But if I bring you in after I've made a bunch of stupid statements to the IRS agent, I'm probably paying you a little bit more.
Mm.
So
yeah, it'll take me a lot more
here.
hours. Yeah, it takes more hours and you're less likely to get a good result late in the game. Okay, so early in the game.
Now, you asked, who do I try to talk away from hiring me, or do I usually coach people first? I don't charge for the initial consultation. And I usually just build the entire playbook. I'll talk to you for 30 minutes. I am truly sorry that you had a house fire or a major loss, whatever that is. I will tell you the next steps. You will tell me who your insurance company is, and I'm going to tell you what their playbook is. So you and the people that I usually don't sign up are the ones whose fires are so bad there's nothing left. If the entire house is a steaming pile of mud, you don't really need me. Or at least you shouldn't. Now, for every rule, there's an exception. We've got one of those in Northern Virginia. Guy had a modular home. It was written to be a stick-built home. The insurance company is paying him for a stick-built home. Policy limits are north of 550. His builder was at 450. Insurance company was at, I think, 300 or 350. He gave them the contract. Hey, here's what I'm paying to rebuild my house. Well, we're not going to pay that. Why not? And there was never a good explanation. We get involved, and we're getting the same stone wall he did. But so so call the adjuster. Hey, we got a contract. Okay, I'll consider it after you spend the money. That doesn't tell me anything. So back and forth. I say, look, so by the definition of the policy, there's two ways we can go. Which is the path that you would rather take? We can go with actual cash value, which is replacement minus depreciation, which is going to be higher than the cost he actually incurred, because he cut some corners, may have given up some of the things that he had because his housing was running out, and he was going to be homeless if he didn't start building. So the timeline for the reconstruction exceeded the time, plus negotiation exceeded the amount of housing coverage he had. So what do you call it? So he gave him an estimate. He's risking coming out of pocket for 50, 100 grand or whatever. Now, and when I asked the question, which pathway do you want to take? They didn't have a clear answer. Okay, so I'm going to present the claim in the light that's most favorable to the client. So if I'm setting the bar here, and we could have settled here, again, we have a negotiation point. How does it play out? We don't know because we're still in the middle of this one. But I did reach out to this guy's boss for the insurance company. Hey, we've got two approaches. I've given you the estimate. We've already started to work I'd like to get this settled before we go down a path of no return. And no return could be litigation, it could be appraisal, it could be a bunch of different things, but just give me an answer, damn it. And I couldn't even get an answer on which path they wanted. All they did was quote the same policy back, cost incurred, or actual cash value. Okay, well, I'll pick the higher of the two.
So that's still ongoing. Tell me, is your own house still ongoing, or is it resolved?
Yes.
Okay.
Ongoing.
Got it. Tell me your number. I'm going to ask you for the top 3 stories. I want each one to take
Sure.
2 minutes or less. Best thing you ever did, best story that you brag about. This is why you should hire me. We killed it. Or maybe even we got a little lucky, but it's a damn good story. 2 minutes, go.
Claim one of our local real estate investor friends had a fire. His policy limits were crap. The insurance company wrote him, and I'll pull the numbers. I think his limits are 100 and 200 grand limits. So the insurance company wrote him an estimate for 150. We step in. I said, look, here's our estimate. How fast can we get this thing settled? And within 6 days, they wrote another check for 50 grand. Another one of our, I'm pretty sure this guy's a mutual friend. He had a house fire in an adjoining county. And it almost became a point of integrity. The insurance company wrote him an estimate, I don't know, 20 grand, 30 grand lower than where it needed, what his limits were. The house was tanked. I spent 10 minutes on it, and I took this one because the guy's a friend. Wrote an estimate for, I didn't even need to write an estimate. I reviewed his estimate, got in a call with the guy. His first thing was, if you're not engaged, then I don't have to talk to you. All right, we'll play that game. So signed the contract, sent it over, got on the phone with him, told him everything that I told him 2 days before. Next thing I know, a check's being issued for 30, 40, 50 grand or something like that. Third one, tree strikes house. The house is an old rectangle, then 2 additions on the back. Tree comes, takes addition 1 and part of addition 2. Insurance company writes an estimate 250-ish. I think we settled that at 650, 750, somewhere around there. No, it was actually 780. The guy brought a custom builder in. It took 2.5 years, but we got the guy in his house, back in his house, fully rebuilt. And a lot of that turned in because of the relationship. The first adjuster on it was removed. The second adjuster, somebody I knew, and we had a good rapport. And I'd like to say a lot of what we're doing is fighting and going there and putting the gloves on and throwing hands and haymakers. But a lot of it's the simplest of, I'm not going to bullshit you. I'm going to tell you the truth. If I'm not strong in an area, either I'm not going to bring it up or I'm not going to talk about it. Or I'll even tell you I'm not strong here, but I do have an argument. For a fourth story, a lady had a tree hit her house, different story. Part of the damage was it scratched up the exterior of her HVAC unit. I don't know if that we were able to articulate that the unit had to be replaced. And part of it was the scratches. There was a little bit of damage inside, but it was iffy. And we were able to convince them that we want to do a one-time settlement and don't want to keep going back for years. If in order to get a full settlement, we have to address this one issue. And they wrote her 20 grand for an HVAC replacement, ducts and interior, exterior, whole thing. So, I mean, there's a lot of great stories that I can talk about, but some of the best ones are where the guy goes to the soccer practice with his kids because he's not arguing with the insurance company at 7 o'clock at night. I mean, those are some of my favorite.
Yeah. Peace. It's the same thing with what I do. It's funny. Obviously, people want me to save them at least what I pay them, and preferably 10 to 40 times what they pay me. And we often accomplish that. But a lot of the time, something I'd underestimated is just how much they value knowing, look, it's taken care of. Even sometimes when I review somebody's tax situation and I take a strong look and I'm like, you got this. I don't have a lot of value to add, but they feel better knowing. Or it's setting up systems. Sometimes it's getting them better reporting, better bookkeeping, better prepared for an audit. Knowing someone's there, it's just that feeling, because that is how humans operate, like it or not, on feelings. And if they feel secure, and hopefully it's actual security, but you can't have just one. If they just feel secure and they're not, that's no good. And if they're secure but they don't feel secure, there's still something missing. So they got to be secure as one can be in this world, and also feel secure. And I think for the longest time, I took such a numbers approach of, here's how much we saved you. And what I found was there were other ways to add value that made it even better. And so it's, as you talk about the opportunity cost, what would I rather be doing? What kind of result would I have gotten? Is this the best possible result? And if I'm comfortable with it, all things considered, which includes being at baseball practice and not stressing out over it, that matters a lot. Here's a question that hadn't occurred to me. Are you a guy that I could use, hypothetically, if I were moving to, let's say, Charlotte, North Carolina, January 2nd of 2027, hypothetically, and I'm just going to buy a house and I wanted to look at different policies. Is that something you do? Do you look at policies and go, look, here's what you want, here's what you don't want, here's what's worthwhile, here's what sucks, blah, blah, blah?
Yes, I do, but there's always a caveat. Insurance is one of those things. You pay for it. They tell you what you're going to get, or they promise you what you're going to get before you pay for it. Once you pay for it, you got it. Then they'll send you the policy. So you pay us and we'll lift our dress.
Okay. So how much can you tell up front based on just gut feel, the contract, the reputation? I mean, you do get to see the policy. No way I'm signing a contract without seeing the policy. So I get to see it. We just don't know how they're going to treat it.
But you are. I can't think of any insurance carrier that says, here's your policy before you pay for it.
Wait, what?
So I cannot think of any insurance company. You say, I'd like to read the whole policy that you're going to bind me to. They may send you an example policy. They may send you example forms, but they will not send you that entire policy until you've paid for it in this process in the back office.
Can I get a refund if I don't like it?
That'd be more of a sales question for the broker, but I would likely say it would not be a refund per se for two reasons. One, if you got a refund, that means your policy was voided from the inception date and you would have dates you were naked in coverage. Two, continuity of coverage, you wouldn't have it. So the way I'd imagine that working through, and I've never had it happen, is the person, if you say, I don't like my policy, I don't like this language, and I want to go to a different carrier, you're going to have that same thought process. You're going to have that same administrative process with carrier number two. But then they'll take over the date that you cancel. I think that's how it would work. I've never had it happen. That
sounds like medicine.
Insurance sales.
It sounds like medicine. We'll tell you what the bill is, right? In medicine, they give you the service, and then they tell you what it costs. They won't discuss it ahead of time. Here, shut up. We'll cover this, but we're not going to tell you what this is. Just pay up, and we'll give you a general sense. But yeah.
Mm-hmm.
And if anything, I'll bet you if you ask questions, they flag you as a problem. Now they don't want you.
So there's two things there. One, contract of adhesion is what insurance policies are. So unless it's the way we are taught in the way we are taught is with a contract of adhesion, if any ambiguity goes to the non-drafter, because you didn't have the benefit to read it, and you can't change it. It's take it or leave it. And insurance is something that you are required to have. So courts tend to look more favorably on any disputes towards the policyholder in theory. And as to the bill, they'll tell you what you're going to pay. They'll give you an indication of what you're going to get, but some of those little pieces of language in there. Earlier we were discussing the house is uninhabitable. So does your policy say if your home is uninhabitable, or does it say if it is not your normal standard of living? And that one or two sentences can completely change how it is. I've seen insurance companies. Another story: attorney, guy's a litigator. His wife's a litigator at some international law firm. He had a fire in a bedroom. It presented as a small fire. Electric blanket caught fire, burned the room. They closed the door. the significant damage was done in that room. That was visual. What most people didn't notice is right outside that door there was an air return. So everything that burned in that fire, we had nylon, we had plastic, we had painted wood, we had carpet, we had drywall paint, et cetera, et cetera, et cetera. And that's one of the things about fires most people get wrong. It's not a bonfire on the beach. It's everything that goes into it. So they told this guy, who was a portly gentleman with some medical issues, they said, oh, the fire was in the upstairs bedroom. You can sleep on your couch. And that's what they told this guy. And I think their estimate was $7,000. But that's what they told him. And some policies would say your house is habitable. Your house is habitable. You can cook in your kitchen. But that wasn't the standard of living. That's not what his policy said. So in his case, we were able to get him into a comparable house, comparable school district. And we got dozens of those stories where one guy with USAA, this is, and I don't want to make this a bitch fest, but this is indicative of where the insurance market is. Guy served the country. Part of service is you're entitled to go with USAA insurance. Oops, another insurance company named. Guy had a small dishwasher leak. By all accounts, less than $50,000. Kitchen, some mold remediation, everything was localized. He calls USAA and they say, well, do you have a contractor? Well, I don't know. Well, if you don't, we're going to send our guy, and our guy is vetted by us. He carries this, that, and the other. He is the good. We'll back him up, etc. Great. So one of the things you learn is the moment you learn to tell the moment that their insurance, that their contract becomes your contractor is if there's a problem. So this case, dishwasher leak, Center Island, you've seen this house 100 times. Not a big issue. You pull the island, you pull the dishwasher, you contain the area, you remove the mold, you clean it up, and you're done. What these guys told him is, I'm not going to be redoing the kitchen, so I'm not going to pull these cabinets. Oh, USAA does not want us to do certain things, so we're going to do it this way, the way they want it, which is putting air movers, which are commercial grade fans to dry in moldy areas. 6 months, this guy's been living in mold. I think it's 20 times higher than outdoor counts. USA has taken the position since that this guy needs to sue his contractor, and they're washing their hands of it. I mean, we're on that one. We finally got them into some type of housing, but they're threatening it. So that one's probably going to be going to litigation. But I mean, that's the current scope of where we are.
Use their contractor or use your contractor. My gut says use mine.
Absolutely. So, one of my general pieces of advice is, no matter how bad your loss is, you need to pick your own contractor as the homeowner. There's a financial incentive for that contractor if they are referred by the insurance company. If I piss off national insurance company, national insurance company doesn't send me $5 million of work. John Hyre's only a couple jobs.
Okay, I've seen that analog in other cases. So when we're selecting a contract, some of this is going to be just based on reputation. And I mean, you still have a sense, though, of which different forms of policy are worth paying for. I'm sure there are certain coverages that are, yeah, you really want to have that, even if we've never read the coverage, it's a good idea. And there are ones you're like, nah, you don't really need that. You know, the odds are so low, or they won't cover, it's a meaningless clause. Do you have any sense of that? Things you would or wouldn't do in general when selecting a policy?
I would go with probably one of the more expensive policies. If somebody's got a stadium named after them, they're more of a marketing company than an indemnity company, in my perspective. I would go to for a carrier point of view, I would go to somebody who's going to charge me more but has a great reputation, and they may have more affluent clients, people that are willing to pay. And I mean, that's really the unfortunate truth. The lower the premium, the lower the expectation should be.
How is AI affecting all this? How's it affecting your industry and what you do? And just in general, anything that you think is relevant to AI and insurance. I mean, it's changing what I do tremendously for me. I'm not worried about it taking over. It's still far too dumb to know. I constantly have to cross-examine it to get to the proper answer. It can't come up with proper answers on its own, but it enables me immensely in terms of research. How's AI doing for you? What's it do to your industry?
So there are rumblings that I have not seen that carriers are using AI on the denial side. You put in bad information, you get a bad denial. I have heard that's happening. I have not seen that. Since my specialty tends to be documentation of house fires, fires are covered unless you've intentionally caused it. Now, I am using AI to help me write my letters. It helps me organize my thoughts fairly quickly. I speak into Claude with a certain fact set, and it helps me draft a letter. I fix the letter, but I may spend an hour on it instead of 6 hours. I really
Yeah.
try to put a lot of thought into how I write my emails because I'm trying to establish certain fact sets. We're also taught anything you put in email may be read in court one day. And if I'm going to be reading an email in court, I would like to have it say, I also told you this, 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 and this. If I keep reiterating 1, 2, and 3 in every email, it's well documented. Now, AI does have access to some of the things that I have to quote. The regulations from the legislator, Fair Claims Handling Act rules. It puts in bullet point. I double check it or I know it. But it helps me organize thoughts. It helps my efficiency.
One of the things I may press you for later,
Anytime.
people who know what they're doing engineer superior prompts. So, for example, I'm very good at prompting it for tax things, and I'm very good at sniffing out when it's missing something, it's a little bit off, because the internet is massive and it's pulling information from everywhere, and it's not weighting information differently unless I tell it to, which I do frequently. Like, there are certain sources that are trusted. There are certain sources, IRS, that it's not to trust. By the way, true story, one of the issues I had with it one time, I said to do a mathematical calculation on depreciation recapture, which you would think AI would be good at that. It's just a mechanical thing. It screwed it up. And it took me a minute. I couldn't figure out why. And I kept looking at it thinking, this is just wrong. And I figured out why, but why would it be wrong on this? And then I thought, oh, exclude IRS sources, redo the math. And it got it right. And here's what happened. It's not that the IRS was wrong or malicious, though they often are. It's that their manuals were so poorly written that AI was confused and did the math wrong. And so even something as subtle, and it took a minute after being in this 30 years of sniffing, oh, wait a minute, something's wrong. Oh, this is probably poorly written. Let's see what happens when we send it to a proper source. So sometime what I would love to hear from you are prompts. How do I find which insurance company has the best reputation? But the conversation, because the first prompt starts it, and then you have a conversation when you start to see the answers, because you have a sense and a judgment that it doesn't. I would love to see that. What types of prompts lead to what answers and how that can help people. Because I'm thinking in terms of what to do if there's an issue, but also ahead of time. Which insurance company do I choose? Which coverages do I choose? What should I expect if something happens? That sort of thing. So I'm just thinking out loud now in terms of my own selfish use and how to best squeeze your brain for valuable non-bourbon related material.
I don't know that I would trust AI to select an insurance company. It does not know the metrics, and I don't think there's enough of a repository of actual experience. Everything I know, none of it's going to be written. You may find opinion pieces on social media, But how do you separate the person that set their own house on fire and says, I don't know why I got denied? They've got a can of gasoline in their hand in their selfie, versus the person that they were just unfairly denied. There are cases where people do excluded acts and legitimately, and to defend some insurance companies, there are times where things reasonably should not be covered or not covered in the policy. That's unfortunate, but it's true. And that's part of the bargain you pay. You pay something, you get something. My dad always taught me there's no such thing as a free lunch. Same thing for insurance companies, same thing for premiums. So to circle back, I wouldn't trust AI for that. I would find a good broker. Captive agents, they're going to sell you one program and one program only. But a solid broker, now brokers are incented too. They have quotas they have to hit. They get incentives if they sell a certain carrier or certain policies. Find somebody who's got a great reputation, and talk to them. Here's what I want to insure. Now, as I look at your bourbon wall, presumably you have more than that. Now, for you specifically, I would want to make sure your personal property coverage is ample. I know you're moving to North Carolina. I don't know how big your house is. Maybe you move into a condo. I'll say you move into a condo and that condo costs $300,000 to rebuild because your condo association owns everything behind your drywall. So your cost to rebuild may be low, and unless, in the way most policies are, if you have $300,000 of coverage, you may have $250,000 of contents coverage. But you've got nice stuff. So you have to have those conversations and say, here's my unique situation. You've got an ample bourbon selection. That might be worth a couple $100,000. And in one fire, even if it's in a different room, the smoke may not come off those labels, and the labels may be where the value is. So there's a unique collection. A friend of mine's got an arcade collection. Good God, man. 300-400 video games from the 80s.
Wow. That's okay. Get over there and play some Galaga and Centipede.
He's got them both. So on traditional policy, you have a replacement cost provision. Now, you can't, that basically means new for old. So how does that translate to his arcade games? I cannot go to the local arcade collective and buy a brand new Star Wars whatever. Now, some insurance companies will say if an item is a collectible, we'll only pay the current market value of it. That gets dicey, doesn't it? So what is the market of Galagos you mentioned? Well, what's the depreciated value? I should ask. So new it cost $1,000 in 1990. I don't know. But now the parts are only worth $300. You use some plywood and some resistors and some glass. How do you value it? I don't know. So if you have a unique collection of anything that has to be disclosed to your agent / broker, and I always tell people, put that shit in writing.
Yeah.
Dear Mr. Broker, I have this collection. This is weird. I shop at high-end things. I need to make sure that my arcade collection, which would cost to get these in this condition, may cost me $500,000. I need to make sure that's covered, plus the stuff in my house. And there may be a rider. And if that broker is worth his weight at all, he'll say, okay, when he talks to the underwriters, I've got a unique situation. How do we underwrite this claim or this policy? And it has to be spelled out. It may be a rider on the policy, maybe an additional premium, and maybe part of your premium. But now the language is where it's really going to matter. Do they have some sort of endorsement on the collectibles that limits their liability? Have one of these right now with comic books because it's collectible and it's no longer made. They want to pay actual cash value. So a comic book in 1970 was $2, I think, $2. Their expert said it's worth 75 cents. Our expert said it's worth $50. Who's right? I don't know. But they are taking the position in that claim that they only owe the 75 cents because that's what the current market value is. So we're going right back to the policy language. How is it written? And better carriers tend to have more forgiving terms, but the best thing you can do, and anybody can do, is have that conversation with their broker and do it in writing. If it ain't in writing, it didn't happen, because they forget when it comes time for an E&O claim.
So it sounds like, now I'm just thinking selfishly because, I'm a lawyer.
Mm-hmm.
So when I move to North Carolina, that'll be an opportune moment once everything's unpacked. Tape everything, film it, whatever. I use outdated terms, right? I wonder what the young people would call that, But use the camera, take the pictures or something better than the camera, and then ask AI to sort through it, and then get some receipts for some of the stuff and tell it to sort it out. It's not that hard. None of that's hard to do. You do it once, and hopefully you never need it. I'd probably start drinking well before I did it, so it could get interesting towards the end. But you had one hell of a documented library, and it would also be a good reminder, because the AI could then come up with a list that might remind you. Like, I won't forget about the bourbon, but maybe there are some other things that, I probably should mention that. Once I'm out of Puerto Rico and back in the States, I will have more boomsticks around me. They're harder to have here. It's gotten better. But that's another thing to document. Granted, I have to be careful. Well, I think the government at this point knows, notions of privacy are rapidly disappearing based on how much is online and so on. Just thinking out loud, though, on how to do it. And so it's similar to selecting a lawyer. For example, when I have a lawyer litigating a corporate veil piercing, we've got case law, but the cases that make it to a decision are, 1 in 200. Where the guy that's done this for years, that's what you said, it's not written anywhere. It's in his head, and it's hard for AI to know that. And so those are the ones where you really want to get that subjective feel, and where reputation and talking to other humans still matters quite a lot. Now, I understand you do other things. You got a side gig. Tell me about your venereal disease side gig. Oh, TMI. I already get in the. I can't. Yeah, you got to show the camera. Turn to your left. There you go. Oh, good Lord. What's the name of the company? All right, move over towards your right. Just a bit. Step right. Your other right.
That's my left.
There you go. There's something I'm not seeing it correctly. Then it's reversing in here. Something. All right.
Yeah, let's do this. I think I've got a card here. So it's short-term debt solutions, aka save the day lending.
So short-term debt, it's STD, debt solutions. Yeah.
Yep.
Okay. STD. Got it.
So short-term debt solutions, STDfunding.com.
Purely coincidental.
Oh, totally. I mean, I've short-term debt, save the day, save the deal. We've heard the other one. We were talking about AI earlier. I actually used Claude to create a website. So we're working out version 2 now. Kind of the thought is be the guy wearing the funny shirt, giving out $2 bills everywhere I go while wearing the shirt. People may not remember the name Jason, but they won't forget the guy's like STD something, give out $2 bills. So doing that for branding. But yeah, we're doing some hard money lending in Central Virginia. Having a great time doing it.
What do you lend on?
Real estate. And I actually will lend in any business-related venture, provided it's secured by a first position in real estate.
Okay, so you alluded to that prior to doing adjusting, you'd done a lot of real estate.
Correct. I've still got. I'm still semi-active in the real estate market. I've got some residential properties, multifamilies, single families. I'm liking office space more. our administration changed, and the priority of this current administration is heavily pro-tenant. If you're pro-tenant, you're generally anti-landlord. And prior to, this 2 administrations ago, that was a pretty left-leaning administration as well. So between two terms ago and this term, I really don't like the single family space now. So I do have single families, I do have offices, and I'm moving more towards the commercial space or anything that I'm buying now.
Really? Okay. So what kind of offices? Is remote going away or offices coming back? What's going on there? Now this is in Richmond, and when he talks, let me clarify, he's in Richmond and he's talking about the administration in Virginia as opposed to the national level.
Correct.
And people don't get this. I mean, I used to invest in Columbus, Ohio, Franklin County. I have 2 properties left that for a variety of reasons I couldn't just unload. And so I'm letting them go to tax sale. We're keeping the lawns cut, and because, code became a money-making machine. I got cited for an open door while my rehabbers were inside fixing. But when somebody steals, but we caught, funny for you, motherfucker. We caught 3 youths. They beat the living shit out of our contractor. They pistol whipped him. They took all his stuff in his truck. They sold the stuff. They were apprehended red-handed in the truck. And with big smiles, they stepped out knowing they would be let go. And so areas that I invested have now become, you just can't invest there. And then on top of that, when you try to evict, they've got legal aid and all these other people that are funded by the county. So this is Franklin County, Ohio, has become a woke hellhole. Somebody ran over my fence. I had a privacy fence. They backed a truck into it, dumped garbage in my yard. You know who the criminal was? Me. Clean that up now.
You're a dirty, dirty landlord, John.
Yeah, filthy. I just dump shit in my yard. It's terrible.
The ones are naughty, naughty, naughty.
Yeah, I've gotten mostly out of there, but for a variety of reasons, I could not sell those 2 properties. Had to do with some ex-partners and so on. And so just letting them go to tax sale. So I feel you. I'm kind of curious. So you're getting into commercial. Tell me about that. Tell me more.
So there's 2 things that I'm doing, and I'm focusing on. I've got some properties that are in nicer parts of town that we have as insurance rentals. So they're furnished rentals. We're doing pretty well with those. But,
tell me. Wait, stop. How much can we rent to insurance companies for? How do I become profitable and attractive to an insurance company to rent to their people? Hold on. I want to hear this. Tell me more.
John, attractive. Dude, Pride Month was last month. So
it's July now. It's July. I'm a patriot now.
There's something else month now. I forgot what the new cause is. So the houses are in nice areas where there's a high owner occupancy. So we furnish them nice. We put them on the market, and people buy them or rent them. Now there's a lot of housing companies, and these housing companies are just growing daily. So anybody and everybody who knows 1 or 2 adjusters is now a housing vendor. They go to Airbnb, they go to Zillow, they go to, I think it's Furnished Finders, they go to Nurse Finder. Everybody's got a shtick, and they're trying to put it into a company. I've got a couple houses that we do this with. We have a pretty good track records. Yeah, we have pretty good track records, but we furnish them nice. I know the way the insurance companies think. So yeah, we rent to those people either through the insurance company directly, but we often prefer to go with a third-party housing company, as opposed to signing a lease with the homeowner to every extent possible. You may have horrible credit, but if I know the insurance company is paying, I'm going to get paid.
So how do you get in with them? What do they like? Is there any secret other than the usual commonsensical, do things nice, do it well, do what you say you're going to do, etc.? I know, well, That used to be common sense, maybe not so much anymore. But what else would you say in terms of, because this sounds like potentially good clients, good tenants.
So it's interesting right now. It used to be you go talk to the adjusters. They know that the adjusters for the insurance company. They know that you're going to deliver. You're going to take care of the people. You're not going to gouge them. But that whole handshake thing has started to go away. Now you got corporate mandates. Everybody is overworked, so they want to go to the national companies. National companies make their job easier. The people at the so how do you get into it? You market it. Adjusters who work for the insurance companies, they can make referrals, but usually would much rather say it's not my problem, it's off my desk. The housing companies, now they've switched to a model where they want you to pay them to be on their platform. Every platform is trying to monetize, and they don't have a huge presence. If they're a national presence and you're paying them $100 a month, they may check their own thing. The best thing that we've done is have good pictures. We're on Zillow, we're on Furnished Finders, we're on Airbnb. Somebody emails, we respond. That's it. Answering the phone.
And what terms do you rent for? If you're on Airbnb, you're going to get a lot of short-term people. That might interfere with some of the longer-term contracts.
I have a 30-day minimum.
Got it. Okay, so 30-day minimum takes care of the regular Airbnb people.
Yeah. So there's a trade-off. It said earlier, there's no such thing as a free lunch. I am foregoing the 2 and 3 day rentals. I'm foregoing some real income, and I'm taking a gamble that I'm going to have a longer term person come next. I've had some of my properties that were vacant for 6-7 months. I've had another one where somebody moved out on a Monday, and on a Thursday, someone's pushing to move in before I could even go inspect it.
What's the premium for this? If you're renting 30 days, what's the premium over a regular rental? How many months do you have to rent to break even with what it would have been like to rent to just some normal person on an annual lease?
So I'd probably rent a house out at $2,300 to $2,500. You can get about $4,500 to $5,000, almost double. Now back out of the utilities, back out of the vacancy. So it's almost a 2 to 1.
Okay. And furnishing well is not hard, actually be kind of fun. If you're into, like, for example, my kids are all about thrifting. And I guess that's a thing with that generation. I could just apply that on a larger scale. Interesting. Okay. What are you lending on?
And what am I lending on? In assets or?
Yeah, so you've got the hard money lending business. What do you look for?
I look for the deal. I look for some skin in the game from the borrower. I want to make sure that if you default, I'm still okay. My assets are protected. My fees are protected. You put some fee. I want you to put something into the deal. My experience has been, and my experience has been, if you don't have any skin in the game, something comes up, you're going to walk away from that deal. I don't want the real estate. So some cash in the deal. I want to be generally 70% loan to cost. I want and 70% loan to value. That's my general basis. Now, look, if I've known you, we've done deals together, we've got something else going, I know you're a man of your word, I may change some of those numbers. But generally speaking, I want to be at 70-70.
Got it. Okay. Okay. Any particular areas you avoid? Like, do you do any super low income?
Doesn't hurt I want to quote a friend of mine, I'm okay either way. If I'm not in love with the area and I think it's a little more risky, you have to put more cash in. But I'm underwriting the deal. I'm determining what I think it's going to sell for, based on the comps. I have a broker's license. I check the MLS. I have a general idea of where we're going to be. Now, if you're in one part of town, I don't like that part of town. I think the values are lower. My ARV is going to be lower, so naturally all works out.
Got it. What do you want to leave us with? What's on your mind? What have we not covered that you think is worthy of coverage?
Whew. How much time do we have? So, there's, I mean, insurance is always one of those things to get what you pay for. One of the things that some investors try to do is put their entire portfolio on one policy. They think they're going to save money or headache. Um, the risk with that is if you have one loss on one property and the insurance company does not want to underwrite you or that property anymore, they're canceling the entire portfolio. Um, so I generally tell people it may cost you a couple of dollars, not even a ton more, but have separate policies on each property.
Okay, that's good to know.
Um, but if there's always a professional in every industry, and a lot of what we're doing now is the adjusting. Some people don't have the experience to deal with it; they don't have the time. Um, some people just don't want to get into the fight, or they don't like their settlement. Decide early if you're willing to bring somebody in. You pay a percentage or a fee to that person to represent you. And there's public adjusters in I think 42 states, 8 states I believe have it outlawed. Um, but if you do have a claim, decide if you want to get help and get it early on. Like many other things, if you need help, it's always cheaper and easier to get it right the first time.
What dollar magnitude do we have to be talking about for it to be worthwhile?
Depends on the state. I generally have a $250,000 minimum per claim.
Okay. Cool. Well, man, I appreciate you sharing some tip. Look, I learned a few things. Again, I don't know the insides and outsides of insurance, so this was useful for me. Just things. Some of it should have been common sense to me, but wasn't. But it's not that hard, for example, to document what I have. The subtleties of personal property versus like the condo example, that's struck home with me. How to find a reputable carrier. I agree, you get what you pay for. That's usually the case. Well, you get what you pay for on a good day, but if you don't pay, you're probably not getting much of anything. I would think the people who cater to the higher end neighborhoods both have a larger margin, like dealing with those people, but also understand that those people, if they're sufficiently irritated, can fight back.
A lot of those nicer neighborhoods, at more affluent neighborhoods, I've seen have the cheaper policies, often because they either equate insurance as a physical object, or both things are equal, which is not true, or they're just cash strapped and they have to save a couple of dollars a month.
Yeah, well, there's so
Um,
many people whose appearance is way above their means, and that's that
yeah,
cuts it.
true.
That cuts in the reality, and you pay a price for it later. Well, Jason, how do people
Yeah.
get a hold of you? What's a good way to get a hold of you if they want to do that and the shirt didn't quite come through?
STD funding, www.stdfunding.com, or Old Dominion Public Adjusters. Look, you can find me on Facebook. I'm usually just trolling somebody. I'm the guy with an MP5 in my photo. That's kind of our differentiator. Not many people have a fully automatic in their in on the profile page. Email, social media. I'm not hard to find. Yeah, I'm here.
Cool, dude. Thanks so much for being on board. Everybody, now, do you provide services outside of Virginia?
Yes.
Where at?
I'm licensed in Maryland, Virginia, North Carolina, Florida. We can, depending on the size and magnitude of a claim, we can partner with an attorney in a given state and work under their license. It gets the rules are a little bit different, but we can and have done that before, where an attorney runs the claim, we work for the attorney works for the homeowner. That's kind of our back door into a state we're not licensed.
This made me think of something you and I discussed some time ago. probably in varying states of sobriety. You have a lot of experience with fire damaged homes, and therefore you can tell truly what does it cost to fix it. You sound like a guy that if investors want to buy fire damaged homes, you could give them a real sense of what's it going to take to rehab that thing. Am I wrong?
I would never say you're wrong, John. Absolutely. Now, and you brought up one thing. I know we're concluding the call. There's a misnomer in insurance that your policy limits should equate to the value of your house at retail or sale. When it's the exact opposite. It should be the cost to take your house down piece by piece and put it up piece by piece. The cost of significant water damage is taking pieces of the house down, drying it, cleaning it, remediating the mold, putting it back together. So that's another thing to consider. Now, to what you asked about investors, there are some ways in which investors can, yes, we can look at the cost, but there's also there have been some people out here who have tagged in on the insurance claim to get some of the recoverable depreciation. So that is a world that happens sometimes.
Got it. Well, cool. Thanks for spending time.
Always a pleasure, John.
Take care.